Hey traders, Okana here. I'm going to show you a strategy called the floor trader strategy based on retracements and trend continuation. And you can see I have two pairs. I'm going to show you the Euro USD and USD JPY. I actually took a couple of trades, so let me show them to you. I know it's a bit unusual. Usually I just back test, but this time I have taken a couple of trades. Obviously I've used price action as well, but here's the first trade was taken on USD JPY here on this candle before this closed, probably around up here at the beginning of this candle here. So at this price, we would put a line, that was my entry there, so let's put the arrow there. And the next trade was actually here on this candle. When it started to move up, I entered somewhere around here in this area and it closed here. So the second trade closed here. The first trade, let's see, here it is. Let me show you so you see that I've taken it. Was actually quite a few pips above, so pretty good trade, all the way to 963. Yeah, that's where it expired. So really good expiry and really great amount of pips in the money. And the next one, as you can see here as well, good amount of pips again. It didn't go anything against me, maybe a little bit slightly, as you can see here, but then jumped up quite a lot. So those were the two trades. So how did I take these? And the strategy, let me show you that real quick. Floor trader strategy, it uses an EMA 9 and EMA 18. That's the only two EMAs it needs. So you can see here. So come here and read the rules. I will put the link in the description below. So carefully read this article before you move on. There are three types of signals for both call and put option. I will show you a few. Level 1, level 2, and level 3. As you can see, level 1 is when price comes lower and enters the zone in between the 9 and 18 EMA. As you can see here, in between the 9 and 18. So that's my first trade here. And then, so this is the pretty much a strong signal. And then you have the level 2, which is quite similar to the last one. It comes and enters the 9 and 18 line, and the signal is triggered before the EMA 18 is touched. So for example, in this case here, you can see that I didn't take this one though. So the last one, this one is riskier. You take the trade when the price is not inside this zone at all. So you take it up here, for example. In this case, you would have traded here already. So these are the three types. So let's quickly take a look at how you could take these trades. So the first thing you want to do in a call option, to take a call option, you must look at the EMAs. You see that price is trending above the EMA. So in this case, you see that market has been a little bit in a ranging condition. So always use price action. So what we're waiting for is a trend. So we want the price to break out of this resistance. You see the struggle here, the accumulation, and then the big breakout, and then you can see the EMAs spike up. So price is trading above the EMAs. And here's the type 3 signal. Price is not in between the lines and trade continues. The trend continues up. And then the next one here, also a type 3, and then the type 2 signal that came in between the two EMAs and continued up. And then the type 1, the strongest one, the signals that comes down all the way down, touches the EMA 18. So these were the two trades I took. How did I take these two? Again, use price action and you're going to have much better trades. So let me remove these arrows and the EMAs, and I'm going to show you how I took the trades even without these two EMAs. Actually, I added them afterwards, and you're going to see that it will help you take much better trades. So for the second and first trade, you're going to see in a moment, I had two lines I placed here, two targets, you can see here, based on the tops, few touches there, and then we go, because we use the 5-minute time frame for this strategy. The floor trader strategy uses the 5-minute time frame, but in this case I also used that because we had these short micro trends here, so I used two lines here. So my first trade was actually based on a support line. You can see this big candle after the breakout here, so I was expecting another retracement, another pullback up and trend continuation after the retracement, so I entered here. And the second one, as you can see, based on this trend line, I entered based on this candle when it was moving up, which expired up there. So you see price action, you don't need anything else, but if you have the EMAs and if you're a beginner, this floor trader strategy is good. And if you combine it with these sorts of analyzers, you're going to have much better entries and much better trades, and you're going to be more confident in your trading. So let's take a look at some put options as well. Here's the Euro USD. It's going the opposite direction, so currency correlation here, which also helps you trade. When you see one of them is breaking the support, moving down, the other one is just breaking the resistance and moving up. So in this case, you can see price retrace back up. Here's the one of the level 3 signals, and then it drops down. So you usually want to wait for a candle in your direction before you take the trade, so that you're sure that price is actually that the retracement is actually over. You want the candle to close or come up higher, or in this case lower than the previous candles, previous 3-4 candles for the retracement. So you can see this here as well. You got the retracement, and then this candle comes up, so it's a signal. But as you saw with price action, you would enter much earlier, so you have much more leverage. So this is how it works. Wait for price to trend, which means it's below the two EMAs in this case, so it signals a downtrend. And there are 3 types of signals, so read them carefully. Once again, they're already explained in detail, but as you saw, you just use some trend lines and then wait for retracements, and then trade in the direction of the trend. And also a good strategy is also keeping an eye on major support resistance lines on higher time frames, so you don't happen to trade right at a support or major resistance, because the trend can be over, price might be retracing. So be careful, check the higher time frames for support, major support resistance line. As explained in some of the other previous videos, I have explained how to do that. For example, the Geeks moving average strategy, if you look at it, it explains there how to set up targets so you don't happen to trade at support resistance lines. Okay, I hope it will help you take some good trades. I will see you next time.